Why does $500 from a tax return feel different than $500 that you earned? Mental accounting is the tendency to put our money into different categories based on where it came from, what we intend to use it for. And economically, these dollars are interchangeable, but often psychologically they are not. And me personally, I tend to use like tax return money or like a bonus from work on like personal needs for myself. Like I'll buy something nicer for myself or something like that, rather than maybe investing all of the money or using the money to, save up or anything like that. And I think that unexpected money, I'll put this in with like gifts, bonuses, tax refunds, and that sort of thing. It always feels less valuable. A lot of the time, people are more disciplined with their earned, steady income that they get every 2 weeks, right? And most of the time, that money's like allocated for, monthly. They got to spend it on rent and bills and groceries and things like that. And these things that I mentioned, they tend to come like once a year. And it feels like now you have permission to spend this money on yourself, right? Because it's outside of your earned income. In 2023, there was a study of 110 different studies that did show that mental accounting and purchasing decisions are real, and people do act in separate patterns depending on where the money came from. Gift cards can be a really good example of this as well, because the money is usually clearly labeled. A lot of times someone might hesitate to spend $75 on a dinner, right, from their checking account or on a credit card. But when you have a $75 gift card, maybe spending $100 on a dinner, even though, you only had 75 on the gift card and 25 came out of your own pocket, people don't tend to see that as $25 of their own money. More of just they got a discount on dinner because of the gift card. There's research to back up that shoppers with gift cards tend to spend money on more pleasure-oriented products rather than if they were using like a credit card. And this kind of backs up the fact that gift cards can be directly correlated to the fun spending account, right? If you have a gift card, let's buy something fun with it. And I definitely think this way as well. When I get like a gift card or something, my grandma will give me an Amazon gift card or something like that, I tend to just blow it on like something I feel like I should use it, so I'll buy something maybe I don't need when I should just use it to buy something I need probably. I see this kind of mental accounting a lot with sales in stores. You'll see a product that's $200 and maybe it's marked down to, $150, and people just see the $50 savings. Well, in reality, it's $150 debit on your bank account. And this doesn't mean that discounts are fake, right? And a discount does produce a genuine savings when it does reduce the price of the item that you were going to buy anyway. And it is not a savings when the discount is on an item that you were not going to purchase. And mental accounting can actually be very helpful in your life. This same tendency can be applied to financial discipline, and that tends to be how I see most people get around it, right? We have automatic retirement contributions, so this money will automatically go to your retirement, right? You have no way to touch it. It's just automatically set aside in your mind for retirement. And the same thing, people have like vacation funds. They put $50 or $100 away, maybe every paycheck, so they can go on a vacation at the end of the year, right? The money's accounted for in your head. You're like, oh, I already know that that's going towards that. And even something as simple as a separate, emergency savings or a, savings in case you lose your job or an emergency expense comes up, that money's for that. And most people tend to not touch it unless one of those things comes up, or maybe a even larger problem comes up. Even something having like separate bank accounts with you and your wife or something like that, right? You guys are able to identify what money belongs in which account and what it's all for, right? The house mortgage comes out of this account, the groceries come out of this account or on this credit card, right? So in your mind, you can already see that in your life, and that isn't necessarily a bad thing. It's just sometimes the mental accounting can be dangerous, and you just have to put a lid on it before it flows into how you do it in your own life. That's the good things. And I've seen this one example in my own life as well. The mental accounting basically separates someone's savings from their debt. They might have $5,000 in savings while they have $5,000 in credit card debt. And in their mind, they're just labeled differently when maybe you should use the money to pay for the credit card debt. And emotionally, the savings is treated as its own progression system, right? Like we're achieving a large savings account, and someone might be very adamant about reaching their savings goals. At the same time, though, they might not be adamant about cleaning up their credit card debt. They're just kind of, it's like its own separate problem. And I've seen people not acknowledge both problems, or maybe they're just focused on one problem, like the saving money problem. They're constantly doing it and they love doing it, but they're letting their credit card just sweep them under the rug, and they're making no progress when you look at, really like a net positive benefit. They're just like, they're saving $1,000, but the interest is raising $1,000. So does it really, did they save any money technically? And I think the easy way to, get around mental accounting and figure out what you should be doing with your money is ask yourself, if I got this money from my paycheck and I got it every month or bi-weekly or whatever it is, what would I do with it? Am I calling the money free maybe because it was unexpected or something like that? I would also look at the opportunity cost of doing something with the money rather than investing it. If you actually got like a very large sum of money, like a bonus of $10,000, look at what that would be if you were to invest it for 40 years, maybe if you're in your 20s or something like that, and really understand what you're missing out on if you were to go and spend it on a vacation or clothes. I think you should also asking yourself, are you ignoring any problems? I'd look at your entire financial well-being and figure out where the issues are, and if any of them are just not getting as much love as the others, and maybe focus the gift card, the bonus, or whatever on that aspect to help clean it up a little bit. And when you're looking at the categories of spending in your life, really focus on it if it's helping you or hurting you. Maybe you have a $500 food budget, but you spend 300 of it going out to eat. Well, you're like, oh, I know I allocate 500 for food every month, like in your mind. Well, maybe we should lower it and stop going out to eat as much to use that money somewhere else, right? So you can kind of see how this all ties into your personal finances. And this can be a very good thing or a very bad thing, depending on how you look at it. And that's just my opinion. Let me know what you guys think. Thanks for watching.